So today, the first thing I want to talk about is the Blackboard app problems. It seems like there's a couple of problems that are common with the Blackboard app that I'm going to go over. Second one is Chapter 2 Handout Part 2. And third, we do textbook exercise 2.7. We'll see how far we get. I think we should get all these done, but we'll see. Okay, first one I want to talk about is this Blackboard app thing. That's not it. Second here. Sorry. Okay, Blackboard app. What I'm kind of finding is, and this is not unique to us or any particular student, is that there's actually a couple things that I'm sorry, I just got a notification that people can see my screen. They come up that make it they can get in the way of submitting an assignment. Okay, first one is save as draft, and just the wording of it, save as draft, sounds like you're saving it like it'll be submitted, and you'll also have a copy that you can look at and all that kind of stuff. It's actually not. It's saying that you want to look at it before you submit it. Now, here's the weird thing, and this is where I think it gets very confusing. When you save as a draft, it'll show you this message. This assignment is complete. Review the submission history. While the assignment might be complete, in other words, you have a file for it, it's not submitted. A better way of putting this up would be assignment is complete, assignment has not been submitted yet. That would be a better way of doing it. But so you look at this and you go, well, it's submitted, and when actually it isn't. And so this is, the save as draft one. Try to avoid that. In this class, you can avoid it completely, because even if you submit the wrong thing, you have unlimited submittals. You can just submit the right thing, and I look at the last one anyways. So in this class, you don't have to use that at all. It's possible in other classes, if you're taking a test and you want to look at it before you submit it, you can use that. But just be careful in that save as draft does not submit it. The second one, I think, is the one that's catching more people. And I say this because it seems to happen when people are using the phone app for it. You do your work or whatever, and then you take pictures of it on your phone. And so this is the one I think that is more common. And that is, the document must be closed before it's submitted. For whatever reason, if you have the document open on your screen and you submit it in Blackboard, Blackboard will show it as pending to me. It's not, it's not a closed file. So when you complete the handout or whatever, make sure you close it and then submit it. And I think that this is more of a problem in the phone thing, because, well, if your phone's like mine, I have no idea what's still open half the time. So you get notifications of a crash or something you didn't realize it had been open for 8 days. But anyway, so just be sure that you close the document before you send it. For whatever reason, Blackboard doesn't like that. Now there is, let me see here. There's a third handout, and this comes right from Blackboard, I believe. And that is what happens when there's a pending assignment. So a pending assignment is one that has not been submitted. However, it's in the process. So if you hit save as draft is in there, if you submit it without closing it, it'll be in there. And this is what I see. It'll show me that. I do not get the submission down here. It just shows that it's pending. And there's nothing for me to cancel out, because I actually don't get to see the submission underneath. Now, you will, because it'll be, before it gets submitted to me, it'll be in there. So if you hit continue, it'll get you to the regular submit screen where you can hit submit. But so if you have something in there, if it shows if it shows that blue kind of circle, why is made that worse? If it shows this blue circle thing, that means I can't see it. It's pending. You can see it because you have it in your, it'll be in your Blackboard account, but I can't. And not only that, I can't delete it. So you have to go through and submit it, make it a submittal for that assignment. And it's confusing because you look at this and it'll show submission, but it's actually not there. So be careful on that. And so, yeah, and I think that this one is the one that hangs up most people, is the one that, this one, the document must be closed. I don't think as many people hit the save as a draft thing, but the document. So is it confusing? Yeah, I agree. I wish it wasn't like that. And by the way, this isn't just for this class. This is for all your classes that using Blackboard, which most of the classes are. So any questions on that? So the kind of two rules: do not use save as draft, at least not in this class. If you do save in class, it is or save as draft. It is not submitted. So just know that. You can still look at it, look it over, make sure it's right, and then submit it. Hit the continue and submit it. But it is not submitted if you hit save as draft. And then this one, and I think this is the one that's the more common, and that is that the document must be closed. So whether you're using it on a computer or on your phone, you must close the document and then submit it. If it's open while it's being submitted for whatever reason, I'm not tech savvy about it, but Blackboard cannot take it. It says that someone's still working on it. Any question on that? And again, so if you're having trouble submitting stuff either in this class or in other classes, just make sure you're not hitting save as draft, and make sure that whatever you're trying to submit is actually a closed document, that whether it's in Excel or it's in Word or whatever, that you close it and then submit it. Okay. Any questions? All right. Well, let me get out of this. Oh, save that. Sure. Why not? Okay, the chapter 2 handout part 2. I think we did some of this, didn't we? The reason I ask is that I don't have anything on it.
We made it to page 6.
I thought so. For whatever reason, it's not in my. I must have saved it. So
We completed page 5.
Right, we on page 6, like I said.
okay, so see, so up through 5. Okay, so I know what it is.
What?
I think I changed the format on this. Did I?
Mm-hmm.
I can't remember. Okay, well, my apologies anyway. Okay, so we are on number 9. Is that correct?
No, yeah, number 9.
Number 9 on page
yes.
6, right?
Number 9.
Okay, so this one. Okay. And I'm going to pull up one more thing here. We didn't goof this one up. We didn't goof that one up. See, I don't goof everything up. That one was correct. All right. So number 9, we'll go ahead and get started and do some. And these journal entries, they're wacky. Just to kind of recap from last time, journal entries used to be journals. People would write out paragraphs of what happened, and you can, they would be, they have these old records, shipping records from the 1400s and whatever. They look like this. They look like someone's diary. It doesn't look like accounting really. And as time went on, they got more and more refined, and finally they came up with this 2-entry system. The 2-entry system was still kind of cumbersome because they still had some writing, but they actually had it saying, okay, that there's 2 things that are going in, 2 things have to happen or else this isn't going to balance. we're gonna be out of balance. So they came up with a system, and it's even been refined more in that till we get to today, it's like, okay, what are the 2 accounts or maybe 3 accounts, but what are those 2 accounts? And are they going up or down? And we have a system that we put it into that will allow us to write down very quickly. You know, no more of this pages of writing paragraphs. Grab the 2 accounts, put the number in, go on. And 2, when someone looks at the account, looks at the journal entry, if they're familiar with journal entries, they'll know exactly what happened. They'll know exactly what happened with it. Okay, let's go to 9. Paid off a few of the accounts payable, $400. What accounts are we going to use?
I think cash and accounts payable.
Correct and correct. Yep. So, you know, what are we going to pay them off with? We're going to pay them off with cash. Right. And underline the whole thing. And then accounts payable. Okay, so we paid off with cash. Okay, so the accounts are cash. Accounts payable. So these are the 2 accounts we need. Okay, let's take the easy one first. Cash, is it going up or down?
It will go down.
Going down, yep. So our cash is going down. How about our accounts payable? Are they going up or down?
Cash, it will also go down.
Correct. Very, very good. So those 2 are both going down. So we're paying out cash, which is sad. But the good news is now we owe less. So we're paying off these accounts payable. We don't owe these people $400 anymore. Okay, what type of account is cash?
Assets.
Yep. Okay, so cash is an asset and it's going down. It's decreasing. So will it be a debit or a credit?
It will be credited.
Yep. Okay, accounts payable.
Liability.
Yep. Should have passed that. Even more so, I should have spelled it correctly. Okay. Okay, so accounts payable is also decreasing. So will it be a debit or credit?
I think debits
Yep.
decrease.
All right. So what is this, May, so 5/27? Okay, I'm gonna put the debit first. You do not have to put the debit first. You put cash first as a credit, that's fine. I'm gonna do it just because the book shows it that way. And so accounts payable. Liability going down. $400. cash. And unless it debits and credits, it does matter what kind of account it is. And you really see that just in this journal entry right here, that they're both going down. One's going down with a debit, one's going down with a credit. So, you know, that debits and credits really don't mean pluses and minuses. It just means left and right as far as we're concerned. There's also a beauty about this method, though, and that is if you get one side, if you know what one side is, you know, if you know that cash is the credit, well, then you know what the accounts payable is. Even if you don't know what accounts payable, you know, where it goes, you know that it must be the debit. If you're just trying to write the journal entry in, if you're just trying to enter this, and you have the two accounts, if you can get one of them, you know what the other one is. So if cash is a credit, accounts payable must be a debit. So one thing about this system is that it makes it more, it doesn't eliminate errors, but it makes it more difficult because the debits have to equal the credits. And if they don't, you know immediately that you got something wrong that you need to fix. Okay, let's see. I'm gonna save this as I go. I probably didn't save it last time. Okay. Made a payment towards the mortgage payable, $1,000. What accounts?
Cash, mortgage payable.
Okay, so cash and mortgage payable. So those two are the accounts. Cash going up or down?
Down.
Yep. Mortgage payable, up or down?
Down.
Down. Good. So it's very similar to this one we just had.
Yeah.
Okay, now, so here's what I was talking about before. So you said before cash is an asset. We'll talk about mortgage payable in a second. So cash is an asset. It's going down, so will it be a debit or credit?
Credit.
Credit. Okay. We can make our journal entry.
That one is decrease too.
I'm sorry? Yeah, the mortgage payable is also going down. But truthfully, if we just want to make the journal entry, we could make it right now.
Oh, okay.
Because cash is a credit, right?
Yeah.
So we know that. By default, we also know what the mortgage payable must be. Now, I'll go through the reasoning why. But if you know that cash is a credit, and you get these two accounts, if cash is a credit, well, you know what the other side is. The mortgage payable must be
Debit.
So now you're absolutely right. The mortgage payable is a liability. Oops. And it's also decreasing. It's going to decrease with a, oops. But you know, like I say, if you get one side, if there's only two accounts and you get one side, you're done. You can make the journal entry. in that way, this, is it quirky? Yeah, it's way quirky. It's a 400-year-old quirky way of writing down journal entry, writing down transactions. But it works. And not only that, it makes it more difficult to make an error because the debits have to equal the credits. So if you were going to work through this and you came up with, you have 2 debits, well, you know something's wrong. So before you even put that in, you'll figure out which one it is, which way it should go. So yeah, this is and here's the thing, people who are familiar with looking at journal entries will know exactly what this is. Oh, they paid off on a mortgage. Someone who doesn't know journal entries, who's never had, who's not, never had a class like this, they'll look at that and it won't mean anything to them. But for those people that know what a journal entries look like, they look at that and they go, oh, they paid off a mortgage. So it's a very quick way of doing it. And for people who are familiar with journal entries, they can get all the information they need just by looking at the transaction. Okay. Number 11, purchased office equipment on credit, $1,110. What accounts?
Cash and equipment.
Good. Wait a minute. No, it's not. I did that wrong. I said yes and I shouldn't have. But they purchased office equipment on credit.
Oh,
No,
so
the
credit
equipment-
accounts and off and equipment.
Okay, right, so yeah, so I'm sorry. The equipment account is great. So when we could purchase it on credit. Let me do something here.
It'll be office equipment and accounts payable.
Yep. Yeah, so and credit, no, I'll show you something here. What am I doing here? I gotta put the accounts in. All right. Good office equipment. You gotta also just put equipment if you want. I'll put office equipment. Okay, and okay, so these are the 2 accounts we have. Office equipment, is it going up or down?
Up.
Now for the tricky one. Accounts payable, is it going up or down?
Up.
Good. I guess it wasn't that tricky. Yeah, so they're both going up. We have more equipment, but now we owe more money. Okay, what kind of account is office equipment?
Assets.
Yep. And by the way, there is this extra sheet. It's also at the end of this handout. But if you're wondering what, you get equipment account, you can't remember, is it an expense or what is that? If you can look on here and it'll. And by the way, I always I tack these onto pretty much everything I put out. Eventually, if you become an accountant, you're not going to look at this. But until you get familiar with these accounts, they're kind of, well, A, there's a lot of them, and B, until you use them, it's really hard to know. Okay, so. Yeah, so office equipment will be here. Again, if you use book equipment, it's fine. Yeah, I'll put both of them. We'll work out the debits and credits after here. So office equipment and accounts payable. Okay, office equipment is going up. Debit or credit?
Debit.
Yep. So it's increasing, so it's going to increase with the debit. Accounts payable, increasing. Debit or credit?
Credit.
Yep. By the way, They say they bought this on credit. That's what they're talking about. Accounts payable is gonna be a credit. When they say they bought it on credit, this is it. The accounts payable is getting credited. In other words, accounts payable is going up. Okay. Okay, so let's get these in. So this would be 6. So office equipment's gonna be a debit. Accounts payable is the credit. Again, they say buying credit. So you get that. So you get that term. Buying on credit. All right. Question on that? And by the way, once you get used to doing it, if you go into accounting, this is what you're gonna look at. It'll be like that. To do all the stuff in between. It's good to do the stuff in between now just to kind of figure out how we come up with the debits and credits. After a while, you get used to it. And it's kind of funny too, because I can tell when students get into the more advanced accounting classes, it almost becomes hard to make a mistake. They'll say, "Well, wait a minute, it's got to be some kind of a liability." Right? And yeah, you're right. And, once you get used to using it, it does become kind of second nature. Okay. By the way, this is really quick. I think I told you guys this. I got C's in my first 2 accounting classes. And journal entries came from Mars. I had no idea how these came about. But by the time I got to the 3rd class, I got an A in my 3rd accounting class. But the first 2, not so much. So anyway, it's a quirky method. It does work, but it's kind of hard to figure it out sometimes. Okay, 12, purchase supplies using cash, 330. What accounts?
Cash and supplies.
Yep. Okay. Okay, so cash and supplies. Cash going up or down?
It will go down.
Yeah. So we purchased gas. So cash is going to go down. And how about the supplies?
Up.
Up. And you kind of know that too from what these accounts are. What kind of account is cash?
Assets.
Yeah, cash is an asset. And so are supplies, right? So if one, this is all taking place in the asset account. So if one goes up, the other one has to go down. So supplies going up, cash is going. Okay. So cash. Okay, so cash, debit or credit?
Credits.
Cash gonna be credit. Asset going down for 330. So supply, so okay, so there's the debit for cash. Should maybe use a different color. The supplies. I just said that wrong. I'm saying stupid things. I'm sorry. The cash is a credit. The supplies are increasing. They'll be a debit. I wish you had more colors in Word. It's kind of strange too, because in Excel they have like 50 of them, and here they have like 4 that you can actually use. The other ones block out everything. All right, so supposed to be supplies are going up. And so that one is taking place completely in the asset account. Doesn't matter to any of these other kinds of accounts. It's all taking place right in the asset. So one goes up, one goes down. We're still in balance. Okay. Issued common stock for cash. Now issued means that we sold. We didn't sell them a product. We sold them the ownership in our place. So it isn't like we sold them, it isn't like we're running a hot dog stand. We sold them a hot dog. We sold them ownership in the place. So this has to do with the owners, not with customers. Okay, so we sold common stock for cash, 4,000. So what accounts are we going to use?
Common stock and cash.
Okay, so stock. Okay, common stock. This one's a hard one. Is it going up or
I
down?
think it will go up.
Yes, we now have more owners. We have $4,000 more owners. So the common stock will be increasing. So we gave them the stock, and they gave us the cash. So now we have more owners, and probably why we sold the stock in the first place is to get money into the place. So the cash, is it going up or down?
It will go up.
Yep. Was that a yawn of excitement? I bet it was.
I don't know.
All right. All right. So common stock, what kind of account?
Equity.
Mm-hmm. And cash, you guys know cash.
Assets.
probably stop asking about that one. Okay, so common stock is going up. Common stock, will it be a debit or credit?
Credit.
Good. And cash,
Debit.
yeah, yeah. Again, if you know one of them, you know what the other one is. So you know they have to equal. So if one's a credit, you know what the other one must be a debit. Okay, so let's see. June 23rd. Okay, so 6.
Cash, then credit.
Cash is the debit. Oops. Common stock, equity. And this would be a transaction you probably wouldn't happen that often. And usually, if you're a large company, maybe it happens more often. But yeah, for a small company, it's probably it could be years before you have a transaction like that. Question on that thing? Okay. Oh, a little bit tricky. Excuse me. We have received cash from a customer previously billed. So what accounts are we going to use?
Cash and
Accounts
accounts
receivable.
receivable.
Yes and yes.
Okay.
Yeah, we got the cash. Customer previously billed. We already sent them a bill, so that would be an accounts receivable. They owe us money. By the way, I'm gonna show you guys a little shortcut trick that is absolutely fine to use. You can abbreviate this as A/ accounts receivable. You'll see, and you'll see that, you'll even see that abbreviated like that. Because someone will be talking, well, what is AR doing about, they'll talk about it as if everybody knows what it is. So accounts receivable is AR. Accounts payable, you'll see is
AP.
yeah. He's already figured out with yeah. So and by the way, you can put it just like that in the journal entries if you want. I'm going to write them out, but you want to just put them in there. Okay, so what kind of an account is all right? So cash is an asset. How about accounts receivable?
Liability. Accounts receivable liability.
As an asset.
Oh, it's an asset. Yeah, I'm looking
Yeah.
at payable.
And again, you can just abbreviate that AR. You see that all the time. Just A/R. Okay, so oh, I didn't say what's going up. So is cash going up or down?
Up.
Trick you on. Accounts receivable going up or down?
Down.
Down. Good. Yeah, they owed us this money, and that's why we counted this as an asset. We said, okay, we're going to count this as an asset because in the future we're going to get cash for it. So it's worth some money. Maybe not today, but in the future we're going to get. And this is this getting the cash. So let's take a look down here. Okay, so cash going up will be a debit. And receivable going down will be, so I'm going to use the abbreviation at least first of all. So this is 6/27/21. Okay, so cash is going up. And instead of writing out accounts receivable, you can simply put this. Accounts receivable. Now I'm going to write it out just because this there's no confusion on it, but it's very common to see it that way, and you can write that on the journal entries. Feel free to just put AR. And you'll hear people call it AR. Okay. Paid all of the accounts payable, $1,100. What accounts?
I know accounts payable.
Is it cash? Paying on account.
Yes and yes.
Is it cash?
Yep. You're paying. What are we paying them with?
Cash.
And the okay, so we have cash. Accounts payable.
Mm,
Okay, so you can say accounts payable or just AP. Okay, cash, bring up or down.
Down,
Accounts payable?
down,
Down. Okay, cash is an asset. It's going down will be a debit or credit.
a credit.
Yeah. And truthfully, if we just want to make the journal entry, we could do it right now.
Yeah.
So we know cash is a credit without even jumping through the hoops. What's accounts payable going to be?
Debit.
Debit. Has to be. Okay, so let's take a look here. So this is June 6. Okay, so we have cash going down. And up here we have, if I use the new shorthand, we would have AP. So truly, if you just get one side, you can actually make it correctly. Now, I am going to put it up here. We have liabilities. I mean, there's a reason why it's it's going to be a debit. So accounts payable is decreasing. It's going to decrease with debit. So it isn't that there's not a reason for it to decrease, but if you do get one side, you get the other. Now, if you get the first side wrong, then the other side is wrong too. But if you know at least one of them. Okay, number 16 does not look very unusual, but it is for what we've been doing. I'm going to go to this. Up until this time, we've just been doing everything in the
Assets and liability.
yeah, exactly, like the balance sheet.
Maybe one equity.
So we've just been doing this stuff, right? Assets. So this is all balance sheet. Oops.
Okay.
So we've been doing all balance sheet up until this point. Now, there are these other two things, though. These are revenues and expenses. Also, costs and dividends are thrown in there too. But these are income statement stuff. So this is kind of income statement. Income statements, revenues, expenses. Dividends aren't on there, but we'll talk about that later. But revenues and expenses, this is money coming in, money going out. And now they do feed into, these down here. So for example, let's say that you took in, oh, geez, what did I just do? Okay, let's try that again. Let's say that you took in revenues of $1,000 cash. And you had expenses of, say, $900 cash. So this would just be counting the money coming in, right? And if you're just working with cash, you say, okay, we took in $1,000 in cash today. We paid out $900 in cash today. How much did our cash account go up?
Go up.
Yeah, the
Good.
cash-
100.
yeah, what's going on with 100? Now the $100 is the only thing that's going to be left, right? This $1,000 you collected, is going to go as you could
900 paid out.
900 being paid out. The only thing that's going to be left from the day is
100.
100. So these accounts kind of count the money coming in. That's kind of my point here, is that these are kind of counting the money coming in, counting the money going out. Yeah. Now, there are there's something good about revenues and expenses. And let's take rent expense. What is more, 1 month's worth of rent or 2 months worth of rent?
2 months.
2 months, right? So rent is always going to be increasing.
Yep.
Now that's good for making journal entries, because whenever you run into an expense, virtually always it's going to be a debit. It's virtually always increasing. There could be something wacky, like the phone company sends you back a check, but how often does that happen? Once it could never. So these are always, and same thing with revenues. What's more, 1 month with revenues or 2 months?
2 months.
2 months. So revenues are also always increasing. We really don't have to worry about the decrease side for revenues and expenses. Does it happen? Yeah, it could be an error. It could be some wacky thing that happened. But for the most part, 99.9% of the time, you're going to have revenues. It's going to be increasing with credits, expenses, debits. So whenever you hear, revenue, credit. Now now think about this. So you figure out, okay, it's a revenue. Immediately, the journal entry. Revenues are always credits. I mean, as we go on here, maybe not immediately right now, but if you know that revenues are always credits, the second you run into a revenue, you have the journal entry, because the revenue has to be the credit. Whatever's on the other side must be the debit. Same thing with expenses. Expenses are debits. Insurance expense, repair expense, rent expense, salaries expense. Well, in whatever expense it is, they're debits. All expenses are debits. So if you run into an expense, it's a debit. Whatever the other account is going to be a credit. It has to be. So revenues and expenses are actually easier than the balance sheet accounts. Okay, so let's go back to what we're doing here. Okay. Received a utility bill. Received a utility bill for $200. What kind of account is that probably going to be?
Utility bills
Utility expenses.
and cash.
Very close. Well, kind of close on both of them.
Utility bills, utility account, expense accounts.
Exactly. So this is, you're probably looking at a utility expense. Let me get anything up here. So utility expense is going to be one of them. Now let's go back to the question here. It doesn't actually say that we paid it.
Received, so accounts receivable.
Well, which one? Accounts receivable or accounts payable?
Accounts received, so
You
accounts
received it, so they
Accounts payable.
payable.
The accounts payable.
Yeah, we're going to have to pay it in the future, basically. Now, once we get the accounts, it's easy, but getting the, so this will be utilities expense. And
Accounts payable.
accounts payable. So at some point in the future,
Oh, okay, I get it. So you receive the utility bill, but it's not paid, becomes accounts payable.
yeah, so this is, now we owe the utility company $200.
Right.
Okay, so
This is
now, nice thing about revenues and expenses, they're always
debits.
debits, yep.
they're always increase and they're always debits. Yep.
That's right there, and we have accounts payable.
Yeah, always increase or always, so utilities expense. Oops. They're always debits. So whenever you run into an expense, you have your journal entry. They're always debits. Whatever's on the other side, this accounts payable is going to be a credit. Okay, the accounts payable though, is it increasing or decreasing? Do we owe more or less?
Now we owe more.
We owe more. Yep. We now owe the utility company $200.
$200.
So this will be accounts payable. And again, feel free to abbreviate that. Keep leaving the A out of that. All right, so this will, all right, so it is increasing. So it's going to increase with a credit. You already knew it was going to be a credit because
We got a debit.
you get the debit, you get the debit, you get the credit.
Utilities. account.
Okay. So that's our first one in the revenues kind of expense area. And again, revenues and expenses are actually easier than these other ones because virtually always expenses debits, revenues credits. That's it. This one's a little bit tricky.
Got wage expense and some.
Wage expenses is correct. Very good.
Oh, is that counts?
And accounts payable.
I'm still thinking.
Accounts payable, you probably put in as wages payable. If you put in accounts payable, that's fine too. But wage expense
Wage expense, okay.
and wages payable. Or accounts, I'll take accounts payable too.
Accounts payable.
So let's see, wage expense. Wages payable, accounts payable, I'll take that too. Wages payable. Use wages payable, you could also use WP. Expenses always increase. And at this point, we can make the journal entry. There's the wage expense.
Let's increase with credit.
It can only be one thing. So this one we can make the journal entry. Wages expense to debit. We know the wages payable will have to be the credit. Wages payable or accounts payable could be the
Liability. Yes.
yeah. If you use accounts payable, that's fine too.
And increase.
Okay, so wages payable will be going up. Oh, I didn't say what it was doing. I should have asked you guys. I already said it. Can't put the genie back in the bottle. So okay, so this is so wages payable, so those are both going up. We now owe our employees $1,600. So yeah. Wage expense. And again, expenses are always debit. So no matter what the expense is, it's a debit. And the other side is what, wages payable or WP. Could be accounts payable too, or AP. Question on that one?
Oh, wait.
So expenses are always debits. Won't fit. I know, I can eliminate a word here. Oh. That's terrible. All right. Okay, well, it's 7 o'clock. You guys want to take a break?
Yeah.
Okay. Say be back with 7:04. Let's say 7:11. How about that? The doggy came back home. Hello. Back, and you're back. Okay, so what we're gonna do now, hopefully we'll finish this thing up today, the handout. And then I'll kind of get started on the, I think I'll give the other one as homework, the exercise 2-7, but I think hopefully we'll have a little extra time to go over some of it. Okay, so let's start sharing. Okay. Sold common stock with investor 3,800. This kind of, actually, we had one similar to this already. What accounts are we going to use? Hey, you guys are sleeping, aren't you?
I know common stock is one.
What did they probably give us? We gave them the common stock, so they're now owners.
Right.
Do we just give it to them because we liked them?
No, but how,
What did they probably give us?
common stock. Cash? I don't know. No, you looking for.
Yeah, you're right, cash.
Cash, okay. They gave us money.
Yeah, probably, usually this is gonna be for cash.
Yeah.
It's possible they gave land or something, but that's very unusual. Okay, so account stock. And notice this, we're not selling this to customers. This isn't like we sold,
Right, so,
to a customer. It's like we. Oh, by the way, common stock too, you can rebate that.
that's increasing.
So common stock, it's CS if you want to do it that way. That's fine too. Okay, so common stock, so common stock, do we have more owners or less owners now?
More on it.
More.
Yep.
So we got more money too.
More money too, so cash is also going up.
Cash is the assets.
Common stock is equity.
Okay, equity.
Cash is an asset.
Asset increase with debit, common stock, increase with credit.
Okay, common stocks, equity, is it increasing with a debit or credit?
Credit,
Credit increase.
credit,
Cash is increasing with,
debit.
yeah. Good. And again, if you know one, you know what the other one is going to be. Now, there's a reason why it's like that, but as far as the journal entry is concerned, if you know one, you know the other one. Okay, so cash is going up.
Common stock is going up. Credit.
One more thing too about journal entries. Let me finish up here now. Gravel around, but and that is that you don't need to put pluses or minuses in the debits and credits.
Oh, okay.
The debit or the credit will tell you whether it's going up or down. So
Mhm.
cash, if it's a debit, the debit says it's increasing. You don't need to put a plus in front of it. The reason I say that is because sometimes people get confused because one will be a plus, one will be a minus, and say, wait a minute, this is a minus, that's a plus. You don't even need to put pluses and minuses in. the debit or the credit will say whether it's a plus or minus. It depends on the account.
Right.
They're both going up. One's going up with the debit, one's going up with the credit. But you don't need to put pluses in there or anything like that. And you can rebate common stock, just CS is fine. Doesn't happen that often. You sell stock usually, but. Okay. Paid dividends. Dividends are also always debits. Because it's always payments going out to, what's more, one dividend sent out or two dividends sent out, they're always going up. And so they're always gonna be debits. And that way they're kind of similar to expenses. And you'll notice something too, there is, even though expenses and dividends are two separate things. Expenses are what the cost to run the business. Dividends are what you're paying to the owners.
Mhm.
So they're two different things, but they're both money going out. And there's nothing else coming back in. There's no asset coming back in. It's not, there's nothing coming back after that. Okay, so paid dividends. So what do we pay them with, do you think?
Cash,
Cash.
Yeah. So
cash and common stock, right?
actually, we're just gonna put it in dividends. Now, I don't know if I told you this or not. I probably did. I should. Dividends are kind of a wacky account. And it's showed differently in different textbooks. Some textbooks, like the one we have, shows the dividends as increasing with debits. So they say, okay, dividends are always going up. Two dividends are more than one dividend, and that sort of thing. So they're always going up. They're like the expenses. Some textbooks will say, okay, dividends are really retained earnings. Well, retained earnings statement. What do they do to retained earnings? They decrease it. So some books will show dividends as an equity account that's going down, is working against the equity. Some of them will show them as being a positive. Now, in both cases, it's the same. They're debits. I think this way, I used to not like this way here, but I think it's maybe a little bit more direct way to think about it. So, but anyway, so for us, dividends, debits.
Cash.
And if we just need to make the journal entry, we could stop right there. Dividends a debit, we know what the cash is. Just for kicks. The cash, is it going up or down?
Down,
Down.
All right, we're paying, make a payment to the owners, we're paying with the cash in place. And dividends are
will
always
go up.
increasing, yep. So cash is decreasing with a credit. And again, you already knew that because if dividends are the debit, cash must be. Okay, so
Okay.
if you want to abbreviate this as just DIV, that's fine too. There's nothing else that DIV can stand for. Cash. But again, whenever you run into a dividend, it's a debit. You know what the other side is. And truly, most of the time, the other side is going to be cash. So Although back, back in the day, they used to, a long time ago, companies would pay dividends and, a lot of times they're already made. So if it was a whiskey company, they'd pay you in whiskey. Now, you may not want whiskey, but you could go trade whiskey. And whiskey was probably worth more than money because a lot of times the money was kind of shady back then. So you'd rather get, if they're making loaves of bread, they'd pay you in loaves of bread. Okay, I can take the bread and I can borrow that for a horse or whatever it is, whereas currency back then was not as widely accepted. But nowadays, virtually all the time is going to be in cash. Okay, here is the first new one.
Mhm.
Perform services for cash. So whatever it is we did, it could be mowed lawns, we could do whatever it is, some kind of service we did, and they paid us cash. Now, is this going to be money coming in or going out?
Coming in.
Coming in.
Accounts receivable.
So
Okay.
the thing about money coming in, is it going to be a revenue or an expense?
Revenue.
So this will be some kind of a revenue. Revenues can have a bunch of different names. You see, revenue, obviously, service revenue, repair. They might say more specifically what they are. And I'm sorry, this Zoom keeps giving me these notifications. What's the most irritating thing is we have these electronic stuff and everything has to notify you. I hate that. You get 100 notifications a day. So anyway, that's just me. So it can also be called fees earned. Revenues are sort of by definition, they are earned. That you don't count those as money until you actually did the work. So here we've done the work. So we performed services for cash. So we did our part and they gave us cash. So we're going to have a revenue.
Earned.
Of some sort. It could be service revenue, it could be real revenue. And cash. Okay, so let's put these in. Now, there is a beauty to revenues. Cost money coming in, which is
Increase.
great. But when you get a revenue, you say yippee, because now you know the journal entry.
Mhm.
Revenues are always credits.
Cash increase.
So,
with debit. Cash is asset increase with debit.
yep. But we have, if you know one side, so we have these two accounts. We know revenue is a credit. We know exactly what the other side is. So if you hit a revenue, you can make the journal entry without even.
Mhm.
And that's kind of the neat thing about this system is that it becomes almost difficult to make a it's not custom like yours, but 280. So right when you notice that there's a revenue, you know what the other side is. Cash is going to be. Oops. The debit. Now you're absolutely right. Though cash, well, revenues are always increasing. And in this case, we received return services for cash, so we've already got the cash. So the cash is also increasing. Yeah, but you're gonna notice, whenever you see revenue, it's the credit, whatever's on the other side is the debit. That's it. I like my cash here. Okay. 21 is a similar one. Billed customer for services delivered.
Hmm.
Okay, so we did the services and we handed them a bill. Whatever it was, mowed lawns, painted something, whatever it was. We did our work, hand them the bill. How are we gonna account for that?
Bill customer for services.
One more time?
Hmm.
Well, first of all, is it gonna be money coming in or going out?
Going out. You do
Coming in.
bill customer service, right? It needs to come in.
It hasn't come in yet. So we hand them the bill. It doesn't say that they paid it yet. So
Right, didn't pay it.
they haven't paid it yet. So we hand them the bill, but it will come in. It's we believe that it will come in.
So the accounts receivable.
So what accounts are we going to use here?
Receivable,
Which one?
accounts receivable.
Good. Accounts receivable. They owe us.
Mm-hmm.
And then what's the other one?
Cash. I don't know. It's a cash. They owe us money. They owe us money.
Not yet. Not
Okay, they owe us, and
I'll give you a choice.
yeah, give us a choice.
Revenue or an expense?
It's going to be revenue.
Good.
I want to say revenue. I swear to God, I wanted to say that. It's supposed to be our money. Yeah.
Don't hold back. Just say it. We're all friends here. I mean, it's like a
Right. Revenue. Yep.
they're wrong. So accounts receivable, we hand them a bill, they owe us $550, and we're gonna count it as revenue. And you say, well, why do we count it as revenue? And the reason is that we've earned it. Whatever the work was, we did our part. So we're gonna count it as a revenue. Our part's done. And again, the nice thing about revenues, always credits. Oops, what is this one?
Increase. Receivables, asset. Debit.
All the credits. Now we can go through this here. This is revenues that are increasing.
Mhm.
They are always increasing. That's why they're always credits. The accounts receivable. Oh, by the way, this could also be AR.
Increasing.
And it honestly doesn't matter to me either way. They put AR or accounts receivable. Accounts receivable, is it going up or down? They owe us more or less?
It's an asset.
Now they owe us more.
Yep. Yeah, now they owe us $550. So
They owe us
we're
more, yeah.
going to increase our accounts receivable. We did the work, handed them the bill. Now there's a receivable. We're going to receive this cash, and that's why that has a value. In the future, that's going to turn into cash. And there are some times when it doesn't, but most of the time, that's going to turn into cash. So I think chapter 6 we worry about what if they don't pay us, but for right now, they pay everything. Okay, so accounts receivable is an asset. Oops. So accounts receivable asset, it is increasing. And we knew it was going to be a debit anyways because Hey, what happened? Oh. There's some kind of weird spacing going on here. Okay. So revenues are always. Credits. Sale of services to customer on account.
Sale of service made to customers on account. So it's a
So.
payment made. Accounts payable.
So which two accounts are we going to use?
It was a payment made, right? It says sales of services made. to customers.
Service.
It's made on account, so actually, probably not. It probably was not a payment made.
Sales of services made.
So no cash. Yeah, we, again, kind of like it's similar to the one we just did. So we made a customer on account. So we did the work, whatever it was, and added it to their account. They owe us $810.
So it's revenue.
Yep. Good. And it doesn't say that we actually collected it. So what's going to be on the other side, probably?
We
Count
didn't collect
receivable.
account receivable.
Yeah, accounts payable or accounts receivable.
Receivable.
Well, we didn't get it yet, right?
Yeah, so it'll be account. Oops. Yeah, so accounts receivable. And again, revenue. Once we get more familiar with this, whenever we see revenue, we're going to say yippee. Because we know exactly what it is. Its revenues are always credits.
Mhm.
So
They both increase.
yeah, so truthfully, once we get to this, we don't even really have to know whether it's an increase or decrease. It's revenues, credit.
Mhm.
So you could actually make the journal entry without even know if it goes up or down. They're always going up, so it's always going to be a credit.
Yeah.
But this is going up. Whoa! This is wrong.
Oh,
Oopsie daisy.
receivable
No,
for the P.
the accounts AR will be accounts receivable, not AP.
Going up with debit.
Yep.
Accounts receivable. Revenue.
Here's a weird thing about this is just me making an observation. It doubles my level here, but when I bold it, which we should make it bigger, it reduces it. I wonder why. Strange. Not terribly interesting, but strange. Okay, so revenues are always credits. So Revenues, oh, it was credits. Yeah, I mean, they're always credits unless something strange happens, but for the most part, 99% of the time, you're gonna be. Okay. So
Just like the other one.
we do one of these already?
No, we did one like it, but
Oh.
different number.
That's a different
You
one.
worded different. You said all employees for 1 week wages of 1,600.
Okay,
It's still the same though.
yeah,
Wage-
exactly.
wage
So
payable.
what accounts were you gonna use?
Wage expense and wage payable.
And truthfully, when you see wages expense, you really don't even have to do anything else, because this is gonna be right here. At that point, you make a journal entry. They're always debits. Now I'm gonna go through the whole thing here, because there are reasons why it's like that, but, all right, so this will be wages payable or just WP is fine. But accounts payable too, that's fine. Okay, so wage expense, they're always increasing as time goes on.
Wage payable increase.
Wages
Increase.
payable, going up
It
or
will
down.
increase.
Increase with credit.
Yeah, we owe more. So this is.
And that will be a liability. Okay.
Hey, look, I spelled it correctly. All right, so, and so that would be going up with a credit, which you
Mhm.
already knew. Okay, wages expense. Oops. Fall off the chair here.
Pay the current month's rent, 2,200.
Yeah, so 390.
Mm-hmm. Expense. Oh, was it debit?
Paid the current month's rent.
So we got rent expense and
Yes. Good.
paid with cash.
Yep, and yep. So rent expense and cash. And we could immediately make the journal entry right now.
Mhm.
The rent expense These are always
Debits.
debits. And if you
Cash
know
is
that the rent
assets.
expense is a debit, then you know that the cash must be the credit. Now, we're gonna work through it, but truthfully, you could just make the journal entry right now. Even without doing any of the increase stuff. If it's a rent expense, it's a debit, whatever's on the other side of the credit.
Credit.
No, we will do this. Rent is always increasing. 2 months worth of rent's more than 1 month, so it's always going up. Until we get to the end of the year, there's gonna be a full 12 months worth of rent.
Cash decrease.
Asset. Okay, so rent expense. Yeah, and so again, just whenever you get an expense, you know exactly what it is.
Debit.
Any expense, rent expense, wages expense, salaries expense,
Everything.
utilities expense, whatever it is. Whenever you see expense, debit, whatever's on the other side is the credit. Okay, I think I'm gonna do 25. I think I'm gonna skip 20. Oh, I'll see. We will do 27, 28. 27, 28 are the same. We'll do it. Okay, purchase supplies on account.
You purchase with cash and supplies. But that's
Close. The supplies,
Expense and supply
not yet.
supplies on account.
purchased.
Supplies,
Purchased.
account.
So supplies, what kind of account do you think is gonna be? Accounts payable, accounts receivable?
Accounts payable.
Accounts
Oh, payable.
Yeah.
Accounts payable. Now, when you said supplies expense, that's not a bad answer. When we first buy them, we count them as an asset. So
Okay.
if we buy a bunch of paper, whatever, it's an asset. It's worth what we pay, you know.
You purchase.
You're just trading one asset for another, cash or whatever. So anyway, it's an asset. As we use it, we then expense it. So
Mhm.
it will become an expense. It just isn't yet. Yeah, that's gonna be accounts payable or AP. Okay, the supplies, are they going up or down?
Increase.
How about the liabilities?
Increase.
Yep and yep. Okay, so supplies are what kind of account?
Assets.
What am I doing? Let's try that again.
Accounts payable, liability.
Cookie stuff on here. Okay, and accounts payable. so we-
And,
Okay, so supplies are increasing with a debit.
mhm.
Quite honestly, if you just want to make the journal entry, you could stop right there. But we're not going to stop right there because we're going to say, okay, accounts payable increasing with a credit. So they're both increasing. Okay, supplies.
That's gonna be it.
So AP or accounts payable, either one. You know, if you feel this is fine. Okay. Down here, paid for the supplies purchased on account at number 25.
25.
So what will we do for that one?
Cash and accounts payable.
Good. Okay, so cash is,
Is decrease.
and accounts payable or AP.
It would increase.
So cash is going down.
Yeah.
So what's happening to our accounts payable? Do we
Going
owe more or
down.
less?
Up.
Actually, they're gonna go down. We owe less
Decrease.
now.
You paid
Right, we all this,
or
right.
paid
Oh,
for the supplies.
Yeah, we used to owe them 160. Now we don't, right?
right.
So the accounts payable is going to go down.
Accounts payable.
So why didn't we do supplies accounts?
Why don't we do
No,
what?
I mean 26 we purchased supplies. So why didn't we do supplies accounts and accounts payable? We did cash and
We got supplies.
no, go down.
Yeah.
Down. This one, yeah. Not 26. No.
Pay for
yeah.
supplies.
We should have
Okay.
supplies accounts, not
Actually, the supplies are already on the book. We already have the supplies up here. Now we're just paying off this debt. So these supplies have already arrived.
Just talk about the other one.
They arrived on whatever the date was. August 29th, these arrived. So now on this date, we're just writing the check. We're not getting more supplies.
With
We're
debit.
just writing the check for the
oh, we
supplies.
paid for it. Okay, I got it.
But yeah, no, I know that I put these in here at the end because I had questions on them in other classes.
Okay, we paid for it. Okay. Maybe my brain is tired.
Well, now we're just paying for these. But I am going to show you something here. Okay, so what? So cash is going down. Accounts payable is going down.
With debit.
Okay, so accounts payable. Is it 160?
Yeah.
so accounts payable, okay, so this is journal entry. Now here's the point I wanted to make with this one that we I'm gonna copy these down so you kind of see kind of what they call is the cycle of it. It's really, when you talk about accounts receivable and accounts payable, you're really just talking about kind of a delay between when the cash train changes hands.
Mhm.
You know, if you look at this one, you know something, this is when we bought it, we put this accounts payable on the books. Now here's where we paid for it. You'll notice that these two cancel each other out,
Mm.
right? I mean, you're crediting it here, you're debiting it here. They,
Mhm.
you know, the only thing that's left are the supplies and the cash. So it really is just a delay in the cash changing hands. So accounts payable and accounts receivable are just saying, okay, this transaction just isn't quite complete yet, but when it is complete, it's going to be, you know, eventually it's going to be for cash. So, and then for this also goes true for accounts receivable. But the same thing is that, you know, the supplies we have, it's just there's a delay in the cash. So these two will cancel out. And so really what's going to happen is you're going to have supplies and you're going to have supplies are 160 and your cash is going to be down by 160. So these are really just kind of delaying, you know, what's going on with the complete transaction. Okay. Any questions on that thing? Okay, I think I'm going to skip these two down here. And I'll tell you what, I'm going to skip them, but I'm going to come back to them next week. There's only two on this, but I want to.
Let's do 27.
Huh?
You don't want to do 27? I'm curious.
Okay, we'll do it. All you students just love doing these accounting problems. I know kids these days. You show them accounting problems, they just go nuts.
Okay.
Okay.
Receive an advance payment. I'm thinking if that's already like revenue we have, or is that cash? I don't know. That's why I want to.
Yeah, it's actually not revenue.
Is it
but
cash? Cash and
it's
accounts
very,
receivable?
it's not a bad answer though. Okay, so let's take the easy one. So received an advance payment from a customer 220.
So it's receive cash, I
Cash.
guess.
So cash would definitely be.
Accounts receivable. But I was thinking, it said in advance. That's what got me. I'm like,
Yeah, well, actually, this is sort of the opposite of accounts receivable.
accounts payable.
And here's why.
Oh,
We see an advance payment. Now, accounts receivable is when we do the work and then we give them a bill, right?
okay.
This
Oh,
one is
so
different.
Yes.
They gave us the cash. We haven't done anything.
Right.
So this is, they hand us the money and we have not done one thing yet for it.
Right.
So here is what it is. So we haven't earned anything.
So
It's not actually unearned revenue. So what is it? Okay. This stuff. It's actually right here.
I didn't see it.
It's an unearned
Yeah.
revenue.
We
An
just-
unearned revenue isn't a revenue at all. It's a liability. It's an unfortunate name for it because unearned revenue, you think, oh, it's some kind of revenue. Well, it's actually unearned. We haven't done anything. So we are going to put that as a liability. Unearned revenue is a liability. It's we owe them. And why? Because they paid us $220. If we don't do anything, we got to give them the money back.
Mhm.
So it's an unearned revenue.
And it's gonna become accounts payable. Oh, it's cash and unearned revenue.
Yeah, it's different in that they've actually paid us the cash ahead of time.
Right, in advance, right, yep, so.
And we haven't done anything. So it's just the opposite of the other one. So this is, stop talking for a second here so I don't goof it up. All right, so cash is increasing. They've actually paid us the cash.
Mhm.
They're not going to pay us anymore. This is, you know, there's no accounts receivable or anything like that because they've already paid us. Now, we have this unearned revenue. We now
It's
owe
increased.
more. It's a liability. It's going to be going up. Like I say, unearned revenue is an unfortunate name, but unearned revenue is a liability. It's when someone pays us ahead of time and we owe them whatever it is, but, now they're probably hoping that we don't give them cash back, that we actually do what we're supposed to be doing. So, right, I mean, if I say I'm gonna, well, I don't know, paint your door for $220 and they give me the $220, they're probably hoping that I just paint the door. If they don't want to get the money. So we're actually, you say, why isn't it a payable? It's probably not a payable because that's usually not what happens. Usually you do the work. And once you do the work, you're done with it, and then it's an earned revenue. But for right now, it's going to be a liability.
Debit, credit increase. Wait a minute.
Yeah,
That's gonna be,
cash will be debit increase, and then that one will be credit increase.
that's a debit decrease.
Yes, and yes. So this would be cash.
Credit increase. Cash is under here. I got it on the wrong one.
Cash is going up. They actually handed us the cash. And now we have more liabilities because we have to either do the work or give them their money back. And again, usually they don't want the money back. Usually they want whatever it is they pay you for, pay you in the first place. So. Oops.
Okay.
And again, this is a liability going up.
London.
Yeah, so unearned revenue really isn't revenue at all. It's similar to an accounts payable. They say, why don't you call it accounts payable? Because usually you don't pay it with cash. Usually you go out and actually do whatever you're supposed to do. So if it's painting a door, whatever, that you're gonna actually do, you're not gonna pay them cash usually, you're gonna actually do the work. But unearned revenue is not a revenue at all. Unfortunate name, but it's a liability.
Liability.
Yep. And this one is sort of the same thing down here.
That's gonna- okay. Same problem.
So the same cash and the same.
I know.
So received cash in advance of services, same thing as before.
Yeah.
So when someone hands us cash, and
Cash will increase.
we haven't done anything. And by the way, sometimes it would just be, you ask for cash in advance because you want, if you don't know somebody or whatever, that I'm not gonna do this work unless they get paid up front. So cash will be increasing,
Increase.
and this is a liability, and it's also.
So we do cash, which is a debit. And this.
Okay, so this will be cash is going up. And the liability is going up. Hey, there's no dollar amounts in
No
this.
dollar, no, I'm looking for
Okay.
that.
Nothing.
Okay. You know, I actually thought I had fixed this. I obviously have not.
Yeah, we just put a dollar amount.
Okay, well, this is where student participation comes in. What dollar amount should we put in for this?
5,000.
I said
5,000.
5,000.
Did you say the same thing?
Yeah. 'cause I could use
Okay.
5,000.
Very good. So we have
5,000.
There's supposed to be 5,000. You have 4 zeros. We need
5,000, right, he wants
Oh.
more money. 5,000 going in.
Yeah, just leave it and see if they pay it. Okay, so 5,000. Okay, so we have 5,000 here.
Revenue. Okay, we're done with this.
with it. Right on time.
Okay, now I am going to assign homework.
Okay, I have a question about the grades you graded so far. Shouldn't we have like 3 grades or how many?
Yeah, there should be 3. What is this?
Because I know I put, in one of my attachments, I put the exam.
Yeah,
and-
I didn't look at them today, so if,
Yeah, because I didn't put anything in that 3rd attachment box, so it was for like chapter 1 test. I know we didn't have nothing for that.
no, the chapter 1 exam, I sent that out in an email, so you should have that.
Yeah, I sent it to you. You got it.
Yeah, so if you turn that in, that'll be, you know, that's a. Okay, now I sent out another handout, this, and I put it, this is exercise 2-7 in the textbook,
You sent this out when?
just before class. It's also in the,
I didn't see that. Okay.
it's also in the class handouts, I think. Let me make sure I put it in there. And all I did is I took the book problem, exercise 2-7, and kind of put it into the same format that we've been using here.
Okay.
And so these are basically all from the book.
Okay.
Yeah, you see, they're kind of familiar. They're somewhat familiar. What I'd like you to do is to go through and give them all a shot.
Okay.
And well, and don't be afraid to make mistakes. You know, that's
Okay.
how you learn. So don't leave anything blank. Go through and put something in for all of them. And you know, we're going to go through it. Don't get me wrong.
Oh, okay.
We'll go through it, but see how you can do on it. You know, I think you guys are there now as far as
Okay, I see.
you know, giving it a shot.
So are we going to go through them on Monday? Next
On
week.
Monday.
On next week.
No, next Thursday we'll go through. So next Thursday what we'll do is we'll go through this. We'll go through the exercise 2-7, and then we will do the practice exam. And at that point, I'll send out the exam. So we're going to have an exam will be sent out next week, and you'll have a week to turn it in.
Okay,
Oh, okay.
So
sounds good.
and we did, you know, we are taking a little bit longer on this chapter. The reason being is that other stuff builds on this chapter. So it actually saves time by taking more time to do this chapter and getting, you know, more people more familiar with it and that. So even though it might feel like we're, you know, slogging through mud or something, actually it'll save time in the long run. So, but yeah, but go ahead and go through those. You know, don't be afraid to make a mistake. And we will go through them, so you'll get the correct answers next time.
Right.
See if you can figure them out. Try doing them on your own. And quite honestly, that's where you're going to learn it.
Yep.
It's kind of like watching somebody do something. You know, like if I watch a bunch of basketball, am I a great basketball player?
No.
No, it doesn't work that way. So it's the same thing here. You know, watching somebody do something, you got to do it yourself, and then you get good at it. So. All right, any questions on that?
No.
Okay.
Oh, I have a personal question.
Yeah.
Sorry, I'll just, I can just wait till everyone else is done. Sorry.
Okay, that's fine. That's fine. You can also private message me in the chat thing also, but yeah, so, okay, well, that'll be it for tonight. And I will see you guys next week. Again, give exercise. So try this on your own.
Mhm.
You're not seeing what I'm putting up here. Hold on, I gotta screen. Okay,
Chapter 2.
so this will be for homework. I don't like calling it homework because it's sounds bad, but you know, try to work this on your own.
Right.
And we'll go through it next week.
I have a question. Do we
Mhm.
turn in this handout we just went through?
Yes.
We do. When do we turn it in?
I will put a thing in it right now,
Okay.
right here. Let me put this up and then that's an excellent question. Okay, so actually you'll see me do it momentarily here. So this is putting it in. Submit handouts here. So this will be the content. Oops, no, we don't want to do that assignment. Probably already have this in here. Chapter 2 handout part 2. The due date will be maybe do it Friday at the end of the next week. So this will be the due date will be October 1st.
Okay.
If you're getting it in early, I would encourage you to do that. Submission details, unlimited attempts. So if you put the wrong thing in, you want to put another one in, you can just do it.
I never do all that. I just click submit. Is that fine?
No, that is fine. But if you submit something and it's the wrong one,
Oh, okay.
you know,
That's-
don't worry about that. You can,
that's-
yeah.
Okay, let's see.
Okay, so that'll be that. Wait, I didn't submit. Okay, here we go. Okay, hit submit here. Okay, so the chapter 2 handout. And again, like if you do submit the wrong thing or you know you miss a page or something like that, that's fine. Just resubmit it, and I usually go to the last one submitted anyways.
Oh, okay.
Yeah, I can figure it out. Okay, so that's that, and I think I gotta do it in this class too. So anyway, so this will be the and again, you know, we just did it. So if you want to turn it in now, it's absolutely fine. There's no turning it in too early. And even if you turn it in late, I'll still give you full credit. It won't be in your grades until I get it. So. Any other questions on that? Okay, so give exercise 2.7 a try. Don't be afraid to make a mistake. And we'll go through it next class. And then we'll start on a practice exam for next class for chapter 2. And that'll be it. I don't have anything else. Okay. I'll talk to you guys in a week.
Thank you.
All right. Thanks, guys.
Bye-bye. Bye.
Thank you.
Professor,
Thank you.
Professor Taylor.
Yeah.
I'm sorry. So with the handout and the assignments you just gave today, are we only up to have like 3 assignments that should have been turned in?
Yes.
How many? Okay, I'm just
Up
checking.
until
It's so
only the
confusing
chapter
for me.
1 stuff. Yeah.
Go ahead, sir. I'm sorry.
Yeah, so this is, oh, I did it. Hold on.
Because I have been having a hard time doing with submissions, so I think I've been trying to send them to you via email, but I'm gonna go back on Blackboard, I'm sorry, and try to do my submission. So it would only be 3.
Oh, you know what? Actually, no, you're right. There actually should have been another one here. Let me see here. We're in chapter 2, part 1.
Chapter 2, part 1.
Let me enter. I didn't realize that I didn't have.
Chapter 2,
And I'm
part
very glad you just mentioned that.
1.
Um,
Can't stop the phone from ringing. So chapter 2, part 1, and then chapter 2 handout part 2 is due on the 1st. And then,
I put both those in for the first, so.
okay, great. Okay, thank you.
Yeah, oh, thank you. I didn't realize I did not put that in, and that was an oversight. So, okay, yep,
Okay, have a great weekend. Thank you.
I will, you too.